Okay, so exercise 8 for Kyle's shoes. They're asking me an income statement and a balance sheet. Can you see they're not asking note 3? But it doesn't mean that they didn't give you information. Okay, so let's do, this is what I like to do. I like to first just fill in like the skeleton. So I'm going to use the nominal accounts for the income statement. And before I even look at the adjustments, I know my nominal, I've got sales 264, cost of sales 176, debtors allowance 45.2. I've got interest on loan, which is the expense here at the bottom. Interest on fixed deposit, which is also at the bottom. Commission income, which is 55. Insurance 2,000. Water and electricity 4415. Telephone 2076. Stationery 3682. Salaries 3838. Rent income 66, and bad debts recovered 900. Now I have everything in the income statement. So, if I look at the balance sheet face, now remember, they didn't ask me note 3, but what do I know in essence? I know that fixed assets is the cost price less the accumulated, less the depreciation. And if there was any addition, I must also add that. So if I look there, I see there's land and buildings, 104,500. There's equipment, and equipment has accumulated. So this is what I have so far. And just by saying that, I already got 3 ticks. Next, financial or fixed assets. Let's quickly look. There is a fixed deposit from Capita Bank, and that is 32,000. Please guys, this column on top stays empty. You don't block on top. Can you see there's no block on top there? The block on top is with the fixed and the fixed. Okay, thanks. So next, inventory I leave. Receivables, I see there's a debtors control. Yes? Yes. Because I might have a fixed deposit at different banks. And you're not going to just add them together. You will actually show all 7 that you have. And then you will block on top to financial assets. Okay. Now, bank is 817. Cash float. Then there's a loan from Absa. $11,440. There is, oh no, sorry, that's 25. I'm sorry. 25, block and top net. And then my creditors is 11,440. Owner's equity is the capital less the drawings. Do I have all the B accounts in? Everything I have so far without the adjustments is in. So now I start with the adjustments. So the first adjustment says rent was received for 11 months. So I know there's going to be an accrued income. And the accrued income makes my rent income more and my receivables more. So what's important? Accrued is going to make my income more because it's part of my income, even though I haven't received it. Right? And it's a receivable. Yes?
How is it accrued income?
It's accrued income. No, read here. Rent was received. And if you look here, it's rent income. So it's receivable, it's not payable. People they have to pay it to me, but for me, it's an income. Okay. Now, they say it's for 11 months. So if I look, it means that 6,600 is for 11 months. Which means I still need to get 600 rand. So my receivable is 600, and it means that makes my income more. My income is actually 7,200. And if you divide that 7,2 by 12, you're also going to get 600 rand. Okay. Everybody shut. Yes.
In operating expenses,
why?
Why?
Because so far, I only use my nominals. I haven't even looked at my adjustments yet. Okay. So the next one, they say 500 of the commission is for the next financial year. And I know future, what does future do?
Minus.
It's going to minus my income. So it's going to minus my income, but it's going to plus receivable or payable? Payable. You guys, please don't lose unnecessary marks because you don't know. I'm going to repeat again. Receivables and payables. It's your debtors and your creditors. It's your accrued income, accrued expense. Prepaid expense, income received in advance. You must know this. If you close your eyes, you must see it. Okay, next one. Next one, yes? Yeah, they give it. Okay, number 3. The telephone account is still payable. So they give you a clue. It's still payable, so I need to add it to payables. I need to pay this bill still. And because it's accrued forms a plus. So my telephone will plus. Because this is part of my expense that I need to pay, but it's still an expense. No. Remember, the only thing that minus is the things I received or paid for next year. So I over-received or overpaid, so then I minus. Okay, yeah, let's go on. This one I want you to look at very nicely. Let me explain it nice and slow. Insurance, let me say this to you. Insurance is always prepaid. Because I pay to be insured. I can't at the end of the month say, oh, nothing happened, so I'm not going to pay this month's insurance. It's not, you don't pay it backwards, you always pay it forwards. So you pay the first of the month to be covered that month. So insurance you can know it's a prepaid. So you can immediately, insurance always say minus. Okay, but now, let's quickly go look. My year, if I look, my year ends 30 June. Meaning it starts 1st July. And this is 26 and this is 25. This is my 12 months. So I want to show everything inside here. Okay. Now they say, insurance includes an amount of 400. So part of that insurance of 2,000 that I paid, a part of it is 400 rand that I paid. Because remember, my insurance expense is the total of all my different premiums, right? It's the total of all my premiums. So I can have a life insurance, an insurance on my stock, an insurance on my building, an insurance on my vehicles. Okay, so one of those premiums is that 400 rand. But now look at it. They say this is paid for the period 1st Jan to 31st December. So can you see? This is a premium for the whole year. What do we call a year in accounting? It starts with an A. Annual. So they could have said it includes an annual premium of 400 rand. Then you would know also it's a year. So I'm going to take that 400 and I'm going to UK it. I know this is 12 months. Now you can do it one of two ways. I started paying this 1st of Jan and it goes on till 31st December. Can you see I'm interested to keep this there because this is part of this year. That should stay there. But can you see this part here is for next year. This part I don't want. So I want to subtract it. Does that make sense? Because for that whole period I paid 400 rand. You guys get me? So now let's look. You can do it one of two ways. You can say, okay, so the prepaid is from 1st of July till 31st December. So it's July, August, September, October, November, December. It's 6 months. Or you can say, oh, you know what? Inside my year, here, they started paying 1st Jan till the end of the year. So it's January, February, March, April, May, June. It's 6 months. So how many of the 12 months is prepaid? 12 minus 6 gives me 6. Can you see? You can decide which one works easiest for you. Is it easier for you to establish what's in my year, subtract it from the total to get what is future? Or you can immediately calculate what's future, whichever one. So now I can see, oh, 200 rand is prepaid. So I'm going to subtract here 200 rand, and with my receivables, I will add 200 rand. So, the next one is my depreciation. So they say depreciation on equipment is 15% on the diminishing balance method. Take into account that the new computer was bought 1st of March for 12,800. This was recorded. When they say this was recorded, it means it's already included in that 52,800. Ne? If I were to draw a T account for equipment, ne? I have an opening, what I buy, and a closing. I buy 12,800. That 52,800 is then the closing. Does that make sense to you? Because they say we did record it. So it's included. If it was not recorded, the 52 would be the opening. Are you guys with me? Okay. So what is the opening? 40,000. Nee. So now I know I'm going to work the new one 12,800 and the old one 40. I can't work on the 52,800. Why not? Because I didn't have them the same time period. This guy I had 12 months. But this guy I bought 1st of March. I only had it March, April, May, June, 4 months. So this guy I only had 4 months. Can you see if I bought this the first day of the year, I could add them together and do one calculation because their time zone is the same. Okay, is everybody sharp? So now they say to me the depreciation is 15% diminishing. So 15% for 4 months gives me 640. 40, but now it's diminishing balance method. So I need to subtract this accumulated 5280. To get the carry value, which would be 34720. 15%, and that gives me 520. 08, like that. Okay, now I add the two, gives me 8485. Very important. When you do your income statement, you're going to write for me depreciation, and you're going to show them separate. 640 plus 5208 gives me 5848. Okay. Because this will count 2 marks and this would be a bagel. Now, if I had one of those two wrong and I just show the final and I cannot see your calculations anyway, then you're going to lose 5 marks. Whereas if you show it separate and one of them is wrong, you can still get 3 marks. Yes. Diminishing balance method. The accumulated, yes, because you work on the carry value. Yes. Say again, baby. Yes. Yeah, you get your 5 marks. But you don't want to take that chance. Not in an exam. Yes. Yes. So let's just quickly go through the 2 methods again. If it's the cost price method, if it's on cost, or if they say the straight line method, or the constant payment, or constant whatever, anything that says it stays the same, you're going to take the new one. You take the cost price, the percentage, the months. The old one, the cost price, the percentage. You add. If it's the diminishing balance method, now, then the new one and the old one. The new one, I will say cost price, percentage over 12. Can you see? Same as with the cost method. Because in the first year of your new asset, your cost price and carry value is the same because you have not depreciated yet. Okay. But now, this is where the difference comes in. The carry value times the percentage is the old one now, because it's the diminishing balance method. Okay, so if I look at this old one here, this old one, let me just highlight it. If you think about it, it's going to be like this. It's that 52,800. I subtracted 12,800. Why? Because I calculated the 12,800 separately. So now I'm left with 40,000. Then I subtract the 5280 because I'm using the carry value because it's the diminishing balance method. You guys see why I minus twice? Okay. Now, very important, also my fixed assets are now going to decrease extra, nay? It's going to decrease now with this depreciation of 5848. Right, because I almost said. Am I going to add the addition? No, because it's already included in the 42,800. You guys with me? So the next one says, the following transactions concerning the building took place during the year and were not recorded. Meaning, this land and buildings year is the opening. You get me? So new offices were built. Can you see I need to add 45 to my fixed assets? Ne? And repairs were done. Can you see that's the expense? Repairs. And now comes this thing. They say, we paid for this cash. And they say it's not recorded. So how much is this in total? 47. Can you see that? So what implication does that have for my bank? You can't plus 47. I'm paying. I need to subtract the 47. So it means that bank is no longer cash. It's now an overdraft because I only had 817 rand in the bank. Now I pay out 47,000 cash. Can you see my bank now becomes an overdraft? Okay. Happiness? So, that is everything, and now I can just close off. So I'm going to close off here. What is my saints? Less 176. Oh, this guy's going to make a loss most probably. No. 00824. So, bad debts recovered was 900. This is 5,000. So this gives me 13,1. 13,1? Yes. Why are we talking? Then I total that again. It gives me. Okay. Expenses. I've got 184415. 2, 4, is that a 6? No. So it's 6, it's 12, it's 4. 3682, 3838, and what's the total? Anybody? Two? 0, 0. Oh, okay, so we still make a profit. Okay, so my profit is, my operating profit. Anybody? I've done it, don't worry. 2208 gives me less 2280 gives me, and there we have our net profit. Our net profit I transfer here. So let's close off. What is my fixed assets? This is quite a calculation now. Can you see? You cannot take the chance of not making that calculation for me visible. Okay. Don't do it at the back of your question paper. I don't look at your question paper. I only look at your answer book. Then you make space. Because in the final exam in matric, they don't give you an extra page. So you need to learn to make space. Okay. 191. 191. Another one. 172. Okay, and if I block on top, there we go. Inventory. Okay, so there was no adjustment. So I take my trading stock as it is, the 23,100. What is my receivables? Block and top. Is that right? Add those two to give me this one. Is this right? This one immediately goes to the bottom here. What's my owner's equity? Trade and other payables. Is that right? What is bank overdraft? Four six. Can you see I don't put it in brackets? I just leave it like it is because it's a liability. It is negative because it's there already. Okay, don't put anything. Nothing in this final columns here may be in a bracket. I will not give you a mark if you put anything in brackets. Okay, so this adds up 317,485. And there we go.